Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 7th of May 2024. Silver is beginning to look quite constructive. As you can see, this is a daily chart and prices have broken out of this bull flag pattern, which is a continuation pattern. This in itself is indeed bullish. The fact that we closed above the resistance trend of this bull flag on Monday suggests that we could see further gains if we can get past a couple of resistance levels that are on the way, starting with 2770-ish to 2808, which is the base of the breakdown from a couple of Fridays ago. In any case, the long-term chart is constructive. If you zoom out and look at the monthly time frame, it's only been just a month that we broke above this bearish trend line that had been in place since the height of the pandemic in August 2020. This multi-year consolidation has been resolved and prices have broken out to the upside, with silver closing above this resistance trend. So the path of least resistance on this monthly time frame is clearly to the upside, and we could see significant gains moving forward in terms of the longer term outlook is concerned. In the short term, we just need to see some further bullish price action to encourage the buyers to step back in, as they may well have at the start of this week, with prices already above last week's high. So for as long as silver doesn't go back below this breakout area, I think the risks will be to the upside, and we could well see the precious metal go for a test of April's high, coming in at 2980 or thereabouts. Gold's bullish trend remains intact, with the precious metal now breaking the resistance trend of its falling wedge pattern. It hasn't got away from the consolidation zone that it has been stuck around in the last few days yet, but the break of the trend line suggests that the precious metal could well be heading higher from here. 2,300 is a key support area that largely held last week, albeit we did dip below it a few times, but on the whole it held, and for as long as that remains the case, we could well see gold push to record highs moving forward. Standing in the way of the record high that was hit in April are resistance levels at 2360, this level here, which was the base of the previous breakdown, and then we have the 2400 level, which is also important because gold couldn't close above that level despite several attempts previously. So those are the next key short-term resistance levels to watch. But if the breakout fails and we break support at 2,300 more decisively this time, then that could potentially pave the way for a move down to 2,222, the high from March or mid-March, and below that we have the 2,200 level. So around this area, it could be where gold may dip down to in the event of a false breakout. In the FX space, the dollar is continuing to weaken because we've seen some soft data from the US, including the non-farm payrolls report, the ISM manufacturing and services PMIs all came out weaker than expected last week, and that caused the dollar to weaken, helping to lift the euro dollar and other major currency pairs higher. Now the euro dollar is now testing a key pivotal area at around 108, which is where we have the 200-day moving average coming into play, as well as the resistance trend of this bearish channel. So a break above that area is what I'm anticipating, and if and when that happens, I think the euro dollar could well go on to rise towards 109 and possibly 110 before deciding on its next move. If resistance holds at around 108, we could well see a dip back down to support at a 107 area, which was previously support and resistance prior to last week's break above it. So that area is now going to be support, and I can put a rectangle box back around this area to signify its importance in terms of support right here. Another interesting currency pair to watch is the Aussie dollar, which has been climbing higher along with other risk assets. The Aussie could well break through key resistance at around 66.50, this line here, which has held rates since breaking below it back at the start of the year. Since then, we've had a couple of attempts to break above it, but so far it has been unsuccessful. However, that could change in the next couple of days if risk sentiment remains positive. So if we get a daily close above 66.50, I think that would pave the way for a potential move up to the December high at 68.71. Now, for more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.